Hello, everyone. I'm Matt Clark, research analyst with Money and Markets here with your weekly marijuana market update. Now, make sure you subscribe to our YouTube channel and get notified each time we post a new video. We've also just launched a new membership program on our YouTube channel that gives you exclusive access to even more cannabis market content. This includes new videos, interviews with cannabis insiders, a monthly live chat with me, blog posts, and other things that involve movements around the cannabis market. Just if you look down below, you'll see a little join button. Just click on that, and you can find out much more about how you can be a part of this great new community. It's a great thing. We've got a lot of content up there already that you can have access to if you sign up today. Now, on with today's podcast. Today, I'm going to answer a reader question about a stock that I've actually covered before, but I think he provides a little bit different insight, and I want to kind of dive back into it. Recently, Akeem commented on our YouTube channel and said, Mr. Clark, first off, you don't have to call me Mr. Clark. Matt is fine. Mr. Clark is not me. But he said, first, many thanks for the consistent market updates. I would be honored if you could do a breakdown of HEXO Corporation. They've been gaining market share in Canada, have a beverage partnership with Molson Coors that gives them exposure to the States, and I think their financials look a bit better than the ultra big Canadian players. I like it as a midterm play, but I believe the long-term gold is in US MSOs. Wondering if I'm missing anything here. Many thanks, Akeem. Thanks for your inquiry, Akeem. I'm honored that you would ask, and thank you for watching our videos. Now, first, HEXO Corporation trades on the New York Stock Exchange. Its ticker symbol is HEXO. It also trades on the Toronto Stock Exchange under the same ticker, but the stock moves about the same in both markets. Now, the company is a producer and seller of cannabis, primarily in Canada. It does sell direct flower under the Time of Day and H2 lines. It also has a cannabis oil mist product called Elixir. And in addition to that, HEXO has a fine milled cannabis powder, as well as lines of cannabis beverages. And Akeem is right that HEXO did look very strong at the first of the year. Following a 1-to-4 stock split in December of 2020, the company's shares rocketed about 179% from a low of $3.38 per share at the 1st of January to about $10.28 a share in mid-February. Those gains have been quickly pared back, and the stock is bouncing between $5 and $7 per share as of late. That fluctuation is mostly due to some continued uncertainty in the cannabis market, because you have to remember, federal legalization has not really picked up a lot of steam here in the last couple of weeks, and until that happens, I think we're going to keep seeing some volatility in the market. Now, shares were boosted at a bit at the end of May. The company announced a $925 million cash deal for Redecan. This is one of Canada's largest privately owned licensed cannabis producer. And of note, this is the third time that Redecan has been an acquisition target. In 2015, both Abamedix Corporation and Global UAV Strategies Limited attempted to acquire the company, only to cancel the deals a short time after they were announced. Now, this is potentially a good deal for HEXO, albeit a little expensive. And I'm going to get to that here in just a second. As it strengthens the HEXO's footprint in Canada, and that's good. And the company is now also working to close a deal to acquire 48 North Cannabis Company, another Canadian cannabis company, to even broaden that footprint out even more. But this week, however, triggered some bad news for HEXO. It released what can only be called a horrendous quarterly earnings report. For the quarter ending April 30th of 2021, HEXO's total revenue was 22.6 million Canadian dollars. That's a whopping 31% quarter-over-quarter drop. That is huge. In the previous quarter, HEXO reported positive earnings before interest, taxes, depreciation, and amortization, or as we like to call it, EBITDA, of about 200,000 Canadian dollars. Not a whole lot, but still it's in the green, and that's good news. But for the most recent quarter that just ended, its EBITDA was minus 10.7 million Canadian dollars. That is a huge drop of about $10.9 million total. Put that in perspective, analysts had expected HEXO's EBITDA to be around 600,000 Canadian dollars to the good. So the actual figure was a big gut shot for HEXO. The biggest high point of the quarterly report was a 14% increase in cannabis sales in Ontario. That was the highlight of the report. When that's your highlight of the report, that means the rest of your quarterly report isn't very good at all. So if you couple miserable quarterly reporting along with a shopping spree, they bought Zenabis, a deal that closed on June 1st for $235 million, and the pending deals with Redecan and 48 North, HEXO is spending a lot of cash and shares to gain market share in Canada. Now, with all those deals coupled with an at-the-market equity offering of about $150 million, HEXO's share count went from 122 million to 147 million in just 6 weeks. Now, if you tack in the Redican deal, the 48 North deal, and a continued use of the ATM or the at the market equity offering, that could add another 75 million shares to HEXO. That's a big share dilution. And yes, Akeem is correct. HEXO does have a deal with Molson Coors to insert them into the U.S. market. However, HEXO's done very little, if anything, to make any inroads here in the States, and that's a concern. So the total revenue picture for HEXO looks decent in the coming years. The company is projected to have about $316.4 million in total revenue by 2023. That's a 291% increase in total revenue from 2020. 2020 was a horrible year, though. But what concerns me is its EBITDA growth, or in this instance, lack thereof. The company had massive losses in 2020, and this is in a time when fellow Canadian and American cannabis companies actually did well. They didn't do too bad during the COVID-19 pandemic, as cannabis was ruled here in the States as to be essential. It kept producers and growers and dispensaries open. Now, projections are for the company to hit a positive EBITDA by 2022, but only to the tune of about $15.6 million. If you compare that, you're looking at revenue around, I think in 2022, of about $242 million. So that EBITDA is really, really small based on that kind of revenue growth. HEXO could see $46 million in EBITDA by 2023, but if it continues to spend money in acquisitions, any gains realized could be much, much farther down the road. And now its projected net income is also a bit of a flag for me. HEXO is digging itself out of a really big hole in 2020 with negative $546 million in net income from that year alone. Projections of the company may not have positive net income until 2023, and it'll only be about a paltry $17 million. That's not necessarily a good sign. And even in the cannabis space, where you don't expect a lot of positivity in terms of numbers, only gaining $17.4 million after a huge $546 million loss in net income is certainly something you want to take a closer eye at. Now, another concern of mine is that the company hasn't exploited its toehold in the United States with its partnership with Molson Coors. So overall, HEXO remains a pass for me. The company's in a hole, and I don't know that it's necessarily making the best moves to get out of it. Those are things that really concern me. Now, it could all change. I mean, it could change instantaneously, but its lack of movement in the U.S. Is a concern for me, especially if legalization starts to pick up more steam. HEXO could be one of those companies that's kind of left behind a little bit in terms of being able to make inroads here in the United States. And Akeem is right. The potential is much greater for American multi-state operators for future potential investment, especially if we see that movement on the legalization front, which right now is kind of up in the air. I'm cautiously optimistic in terms of all that. Now, before I go, in our community section last week, we did ask you which cannabis ETF you think had the most potential coming up. This was on the heels of an ETF comparison video I did on our YouTube channel you can check out. Nearly 36% of you said MSOS was your ETF of choice. MJ was a close second with 24% of the vote, and YOLO was third at 17%. Some of you also mentioned TOKE or Toke, and I want to thank everyone for your responses. We're going to try to add polls on our community section weekly, so make sure you check back for more. We're going to ask various questions involving investing, cannabis, and the like. Now, I do want to say I am looking at a few cannabis-related ETFs to add to our cannabis watch list. I'm going to pick one. I'm just not sure which one yet. And if you want to keep track of that cannabis watch list progress, and by the way, we're up double digits. As soon and you want to know as soon as I add a company to the list, I do encourage you to join our membership program here on YouTube. I provide weekly updates about stocks on our watch list, along with exclusive videos, interviews with cannabis insiders. There's also blog posts about cannabis investing news and much more. We're working to give you our first live chat on YouTube with me. You'll be able to ask me just about anything related to cannabis investing. We'll be doing it live. We're in the process of getting all that set up, so make sure you check back. And all that is part of being a part of our membership community. So just click join on our YouTube page to find out more and how you can get access and what all you get access to by joining. You can also follow me on Twitter, where I'll be giving even more insights, not just in the cannabis market. You can find me, my handle is @InvestWithMattC. That's @InvestWithMattC, all one word, on Twitter. So you can find me and follow me there. I've got a smattering of things that are investment related, sports related, all sorts of stuff. So check me out there on Twitter. That said, I do want to thank everyone for watching our videos each and every week. We do it because we want to bring you the best insights into cannabis and the broader market that we can to help you bolster your portfolio and your gains. If you do have a cannabis stock you'd like me to look at, I do want you to email me, feedback@moneymarkets.com. We'll drop that email address right down there. And you can do so, just email me there. and I'm more than happy to put your thoughts on the list and address them when I can. Now, we've got much more coming up this week. We'll have the Bull and Bear podcast and so much more. Don't forget to check out our new Ask Adam Anything video series. I get to sit down with Adam Odell, our chief investment strategist, and ask him any question you have that you email to us or put on YouTube. Also, Green Zone Fortunes co-editor Charles Sizemore has a weekly series called Investing with Charles. He breaks down stocks each week and gives you his perspective, lets you know whether they're ones you should buy or ones you should stay away from. And also, I'd be remiss if I didn't say you should check out moneymarkets.com each and every day for new content that provides safe, sound, smart, simple, profitable investment information for you. I'm Matt Clark, research analyst with Money and Markets, host of the Bull and Bear podcast, and your weekly marijuana market update. Until next time, everyone, safe trading.